Buckle up, everyone, because we are diving deep into the world of auto financing in India, specifically Toyota Financial Services India. Their latest annual report, the 13th one covering the financial year 2023-24, just came out, and, well, it's a treasure trove of information.
I know, right? It's really fascinating to see how they lay out not just their own financial performance, but they give you a real sense of the trends in the entire Indian auto industry. Their approach to risk, even their work in corporate social responsibility, it's all there.
And here's a little tidbit to get you hooked. Did you know that despite all the talk of global economic slowdowns, India's auto sector is actually booming?
It's true. Passenger vehicle sales are at an all-time high.
Yeah, so there's a lot to unpack here, and by the end of this deep dive, you'll have a really solid understanding of how Toyota Financial Services India is doing what they're up against and how they're tackling this really exciting market. But first things first, can you give us a quick overview of Toyota Financial Services India? Like, when did they set up shop? What exactly do they offer, and where are they operating?
Sure. So they were founded back in 2011, and their main gig is providing a bunch of financial services, vehicle financing, dealer financing. They even have leasing under their Kinto brand.
Oh, yeah, I've heard of Kinto.
And they're not just working with Toyota customers either. They also cater to Maruti Suzuki customers.
Interesting. So they've got a pretty broad reach. What about geographically? Where in India are they operating?
They're currently in 262 outlets all across India, which actually covers something like 92% of Toyota's entire sales network.
Wow, that's a pretty extensive reach. Okay, let's talk numbers. What were some of the key financial figures that stood out to you from this report?
One thing that really jumps out is the growth of their loan portfolio. We're talking a 52% increase, from 89,505 million Indian rupees to 135,873 million.
A 52% jump. That's huge.
It is.
But I also noticed that the report mentions their profits are down. Is that something to be concerned about, or is it just a temporary dip?
Well, that's the question, isn't it? I mean, on one hand, a 52% increase in their loan portfolio is definitely something to celebrate. But the fact that profits are down despite that growth definitely raises some questions. It could be a sign of some underlying issues, or it could be a strategic move. So let's dig into that a little bit.
Let's.
Okay, so the report attributes the decrease in profits to two main things. One, a reduced net interest margin, and two, an increased credit cost.
Okay, so break that down for us. What does that actually mean in plain English?
Sure. So net interest margin basically means the difference between the interest they earn on the loans they give out and the interest they have to pay on their borrowings. A smaller margin means they're making less profit on each loan.
Got it. And what about the credit cost?
That basically means they're having to set aside more money to cover potential losses from loans that might not get paid back, possibly because more customers are defaulting.
So they're making less profit per loan and potentially dealing with more defaults. What does that tell us about their approach to risk? Are they being overly cautious, or are there some warning signs we should be paying attention to?
Well, that's a good question. And the report does highlight the fact that they have a pretty comprehensive enterprise risk management framework.
Okay, so tell us more about that. What does that involve?
Well, they have specific committees dedicated to monitoring all sorts of risks, like a risk management committee and an asset liability management committee. It seems like they're taking a pretty proactive approach.
So they're not just hoping for the best. They're actively trying to anticipate and manage potential problems. What are some of the specific risks that are keeping them up at night?
Well, the usual suspects, really. Credit risk, meaning customers are not paying back their loans. Then there's liquidity risk, which basically means making sure they have enough cash on hand. And of course, interest rate risk, because fluctuations in interest rates can really mess with their profitability. And they even acknowledge the importance of managing operational and IT risks as well.
Right, because those can be just as disruptive as any financial risk. So it sounds like they've got a pretty good handle on identifying potential threats. But what about actually dealing with them, especially when it comes to those delinquent customers? What's their strategy there? Are they just crossing their fingers and hoping for the best? Or do they have a plan?
Oh, they definitely have a plan. The report talks about their monthly risk management committee meetings, where they really dig into the data, they segment their portfolio based on risk levels, and then they tweak their strategies accordingly.
So it's not a one-size-fits-all approach.
Right. It's very dynamic. They're constantly monitoring and adapting.
That's good to hear. And what about the nuts and bolts of actually dealing with those customers who are behind on their payments? What's their game plan there?
Well, for starters, they've implemented these automated payment systems which makes it easier for customers to stay on track with their payments. Plus, they're really leveraging data analytics to spot potential problems early on. And for those really tough cases, they've partnered with collection agencies all across India.
Okay, so they're trying to cover all their bases, which makes sense given all the economic uncertainty in the world right now. So let's zoom out for a minute and talk about the bigger picture. How is the global and Indian economic landscape impacting Toyota Financial Services India? I mean, we know there are some challenges out there, but are there also opportunities? What's the overall outlook?
Well, the report actually paints a pretty optimistic picture.
Yeah.
Both globally and specifically within India.
Really?
Yeah. Globally, despite all the concerns about inflation and geopolitical risks and all that, the economy has actually shown it's pretty resilient. The IMF is projecting a global growth rate of 2.4% for 2024.
So cautious optimism on the global front. What about India specifically? Is their economy feeling the pinch too, or are they doing their own thing?
India's economy has been performing quite well, actually. Domestic demand is strong, rural demand is strong, manufacturing is stable, and the overall outlook for fiscal year 2025 is positive, even considering those global challenges we talked about.
That's good news for India. Now let's zero in on the Indian auto sector, which, as we mentioned earlier, is booming. We're talking record high passenger vehicle sales, 24.5 million units. That's incredible. What's fueling this growth?
Well, a couple of things. For one thing, vehicle availability has improved, but I think the biggest factor is the rising popularity of SUVs, especially in the higher price brackets.
That makes sense, given the growing middle class in India. So here's the big question. How is Toyota Financial Services India positioned to capitalize on this auto boom? Are they just riding the wave, or are they making strategic moves to grab a bigger slice of the pie?
Oh, they're definitely not just sitting back and watching the show. They're making some pretty savvy moves.
Like what?
Well, digitization is a huge focus for them. They're implementing all sorts of initiatives to streamline their processes and boost their efficiency. And they're also working on improving manpower productivity and expanding their reach geographically to connect with more customers.
So they're working smarter, not just harder, and they're going where the growth is. Now I want to switch gears a bit and talk about something a little different. Their corporate social responsibility initiatives, or CSR. What are they doing to give back to the community? Is this just for show, or are they really committed to making a difference?
It seems like they're genuinely committed to making a positive impact. In this financial year, their CSR efforts were mainly focused on education and rural development.
Can you give us some concrete examples?
Sure. For example, they built a whole school building in a rural area near Bangalore. They also built 2 Shishu Kendras, which are basically childcare centers. And they even went as far as setting up a community-based drinking water plant.
Wow, that's impressive. It sounds like they're really investing in the communities where they operate, not just extracting profits. And I think it's really cool that they encourage their employees to get involved in these projects too.
I agree. That really speaks volumes about their company culture and their commitment to social impact.
Okay, so we've covered a lot of ground in this first part of our deep dive. We've seen their impressive growth, learned about their proactive approach to risk management, and even gotten a glimpse of their commitment to social responsibility. But we've only just scratched the surface. Welcome back to our deep dive into Toyota Financial Services India. You know, I'm still thinking about that 52% jump in their loan portfolio. But then there's the whole thing about their profits being down. It just seems kind of counterintuitive, doesn't it?
Yeah, it definitely deserves a closer look. Remember we talked about that reduced net interest margin and the increased credit costs?
Mm-hmm.
Well, let's unpack those a bit more and see what's really going on with their profitability.
Okay, so the reduced net interest margin, that basically means they're making less profit on each loan they give outright. Is that just how the auto financing business works, or are there some bigger forces at play here?
Well, the report points to rising interest rates as a major factor.
Oh yeah, interest rates have been all over the place lately.
Exactly. When interest rates go up, it costs them more to borrow money, which eats into their profit margins. It's a pretty common challenge for financial institutions when rates are on the rise.
Makes sense. And what about those increased credit costs? The fact that they're having to set aside more money for potential loan losses. Is that a sign that things are going south? Or is it just them being cautious in uncertain times?
It's probably a bit of both, to be honest. The report does mention an uptick in delinquencies, meaning more customers are falling behind on their loan payments.
Not good.
Right. It could be due to all sorts of things, economic hardship, maybe some changes in consumer behavior. It's hard to say for sure.
So not necessarily a reason to panic, but definitely something to keep an eye on.
Yeah.
How confident are you in their ability to manage these risks and, adapt their strategies? Are they being proactive enough?
Well, from what I'm seeing in the report, it doesn't seem like they're ignoring the problem. They're actively tracking those delinquencies. They're using data analytics to try to spot potential issues before they blow up. And they're even working with those collection agencies to chase down those unpaid loans.
Good. So they're not just sitting around twiddling their thumbs. Now, remember we were talking about their big push towards digitization.
Yeah.
I'm curious how technology is helping them navigate all these challenges and, position themselves for future growth. Is it just a bunch of hype, or are they actually putting tech into action?
Oh, it's definitely more than just hype. They're implementing digital solutions throughout their operations. Everything from streamlining loan processing and approvals to connecting with their partners digitally.
So imagine dealerships, insurance providers, even credit bureaus, all talking to each other seamlessly. That's the kind of ecosystem they're building.
Exactly. Less paperwork, faster turnaround times, a more connected system. It's a win-win for them and their customers.
I like it. Are there any specific examples of this in the report?
Absolutely. They talk about moving their IT infrastructure to the cloud, which gives them a lot more flexibility and scalability. Plus, they've set up this centralized integration platform so they can connect with all their partners more efficiently. These are big steps towards a more agile and responsive technology foundation.
That's really interesting. They're embracing the digital future for sure. But technology is only as good as the people using it. How are they dealing with the need for skilled and adaptable workers in this constantly changing environment?
That's a great point.
Yeah.
And the report actually spends a good chunk of time talking about their human resource strategies. They keep using this phrase, agile workforce.
Agile workforce.
Yeah, it basically means they want employees who can roll with the punches, learn new skills, and contribute to a culture of constant improvement.
So it's not about just finding people to fill slots. They want people who can think for themselves and grow with the company. What are they doing to attract and keep those kinds of people?
Well, they're offering things like flexible work arrangements and family-friendly policies. They even have these coffee with the CHRO sessions to encourage open communication. And they really emphasize continuous learning and development, especially around their Toyota Way principles and TFS values.
So it's about more than just perks and benefits. It's about creating a workplace where people feel valued and empowered. Are they seeing any results from these efforts?
Their employee engagement scores are pretty high, actually, higher than the regional averages. And they're also really proud of the fact that their entire staff completed this mandatory information security awareness training.
That's a good sign. Shows they're taking cybersecurity seriously. Speaking of which, let's circle back to their risk management framework. We touched on it earlier, but I'd like to dig a little deeper into their approach, especially given all the economic uncertainty out there.
Right. Well, they've adopted what they call a proactive approach to identifying, assessing, and mitigating risks. And they're not just looking at financial risks, they're also thinking about operational risks, IT risks, even compliance risks.
So they're not just looking under the bed, they're checking the closet too.
Exactly. They understand that any weakness can create problems throughout the whole organization.
Okay, so they're casting a wide net when it comes to spotting potential risks. How do they actually put that into practice? What do they do?
Well, they have these dedicated committees for each type of risk, like the Risk Management Committee and the Asset Liability Management Committee. And these committees meet regularly to analyze data, look at trends, and adjust their strategies as needed.
So it's not just a set it and forget it kind of thing. It's a dynamic process that evolves with the changing landscape. And speaking of evolving landscapes, what about cybersecurity? I mean, cyber attacks are becoming more and more sophisticated. How are they protecting their systems and data?
They seem to have a pretty solid cybersecurity posture. They're constantly monitoring these key risk indicators. They do regular phishing tests to see how aware their employees are. And they even run these IT systems disaster recovery drills, just to make sure they're prepared for the worst.
That's good to know. Sounds like they're taking it seriously, which is super important for any financial institution dealing with sensitive customer data. Now let's talk about how they borrow money and manage their liquidity. What kind of insights did you glean from the report?
Well, they have a pretty diversified borrowing profile.
Yeah.
They mix long-term and short-term borrowings to minimize their risk. And they raise funds through a variety of channels. Domestic non-convertible
Debentures.
Yeah, basically loans that can't be converted into equity. Bank loans, of course. And even external commercial borrowings. from both banks and their own group companies.
So they're not putting all their eggs in one basket. Smart.
Yeah.
What about managing their liquidity risk, making sure they have enough cash on hand to meet their obligations?
They've taken a pretty conservative approach there. They hold a good amount of cash and cash equivalents, as well as what they call high-quality liquid assets, which are basically assets that can be easily converted into cash.
So like an emergency fund.
Exactly. Plus, they have access to credit facilities from several different banks, so they've got a safety net.
Okay, so it sounds like they're being pretty prudent and responsible with their money. Does the report offer any kind of independent assessment of their financial health?
It does. Crystal Limited and ICRA Limited, which are two of the top credit rating agencies in India, have given them excellent ratings for their financial stability.
So they're getting a thumbs up from the experts. That's reassuring. Now let's switch gears again and talk about their expansion plans. We touched on their efforts to reach new markets, but I'd love to get a little more granular. Are they just chasing growth for growth's sake, or is there a clear strategy in place?
The report outlines a pretty multifaceted approach to expanding their reach and market penetration. Geographic expansion is definitely a big focus. They want to add more locations, especially in those up-and-coming rural and semi-urban markets where the demand for vehicles is skyrocketing.
So they're going where the action is. Smart. Are they looking at any new segments within the auto financing market?
They are. They're venturing into used car financing, which is a huge market in India with massive growth potential.
Used cars.
Yeah. It lets them tap into a much wider customer base and cater to people who might not be able to afford a brand new car.
Makes sense. Broadens their horizons and sets them up for more sustainable growth in the long run. Any other initiatives we should know about?
They're also expanding their leasing and mobility solutions under that Kinto brand we talked about.
Oh, right, Kinto.
It's aimed at this growing group of consumers who are more into flexible and affordable options, like subscription-based models, instead of traditional ownership.
Kind of like the Netflix of car ownership.
Exactly. They're keeping up with the times and anticipating how consumer preferences are changing.
I like it. So they're not just resting on their laurels, they're constantly adapting and evolving to stay ahead of the game. Now, before we move on, let's revisit those CSR initiatives for a minute. We talked about their focus on education and rural development, but I want to get a better sense of the real impact they're having. Are they actually moving the needle, or is it all just window dressing?
Oh, they're definitely not just writing checks and calling it a day. They're really hands-on with the projects they support, making sure they're having a meaningful impact.
Can you give us some specific examples of the difference they're making?
Sure. So that school they built near Bangalore, it's now providing quality education to 225 students. And not just education, they've also got hygienic facilities there and even kitchen equipment so the kids can get nutritious midday meals.
That's fantastic. They're investing in the future of these kids. What about those Shishu Kendras? What kind of impact are they having?
Well, those child care centers are providing integrated child development services to 30 kids. Plus, they're supporting a lot of mothers in the surrounding areas. They're tackling some really important issues like malnutrition and early childhood education. So they're laying the groundwork for a brighter future for these children.
That's great to hear. And they've also provided clean drinking water to over 1,200 people, including 300 school children. Through that community-based water plant we talked about, they're really addressing a wide range of social needs, making a real difference in people's lives.
And the fact that they encourage their employees to get involved in these projects is just icing on the cake. It creates a real sense of ownership and pride within the company, and that positive energy spills over into the community.
It's really inspiring to see a company that cares about more than just the bottom line. They get that their success is connected to the well-being of the communities they serve.
I couldn't agree more. It makes you wonder, how can we as individuals and organizations do our part to build a more equitable and sustainable world?
That's a great question, and it leads us perfectly into the final part of our deep dive, where we'll tie everything together and leave you with some food for thought about the future of Toyota Financial Services India. Stay tuned. And we're back for the final stretch of our Toyota Financial Services India deep dive. I gotta say, this has been a pretty insightful journey. What about you?
Totally agree. This annual report has really been like a window into their world. We started by looking at numbers, but we've uncovered so much more. It's a company with a real story, facing challenges head-on and making a positive impact.
Yeah, exactly. It's not just about crunching numbers. It's about strategy and vision, and even their commitment to doing good beyond just profits. So before we wrap things up, let's do a quick recap. What were some of the key takeaways that resonated with you?
For me, it's their ability to adapt. I mean, they're dealing with economic pressures and a constantly changing market, But they're not just surviving. They're innovating and finding ways to actually thrive. And their commitment to digitization really stood out to me too. They're not just talking about tech, they're actually using it to streamline their operations, make things more efficient, and create a more connected ecosystem.
All great points. And I have to say, I'm really impressed with their focus on their people. They're investing in their employees, creating a positive work environment, and they really seem to understand that their workforce is crucial to their success.
Definitely. They're fostering a culture of adaptability and continuous learning, a shared commitment to doing things well. And let's not forget their dedication to corporate social responsibility. It's not just a side project for them. It's woven into everything they do. Their initiatives in education, rural development, community well-being. It all shows a real commitment to making a difference beyond just profits.
It's great to see a company that actually walks the walk. They're showing that financial success and social responsibility can go hand in hand. They can even reinforce each other.
Absolutely. A valuable lesson for any business, really. So as we look ahead, what are some of the questions this deep dive has raised for you? What will be interesting to watch in the coming years?
Well, I'm curious to see how their digital transformation and expansion into new markets play out in the long run. Will these strategies ultimately pay off? Will their profits rebound as these initiatives gain traction?
And what about the competitive landscape? How will they navigate the increasingly crowded world of auto financing in India? Can they secure a top spot? Or will they be facing some serious competition from new players and shifting market dynamics?
Great questions. And only time will tell. But this deep dive has given you, our listener, the knowledge and insights you need to follow their journey and draw your own conclusions. What stood out to you? What piqued your curiosity?
We encourage you to keep exploring this fascinating world of auto financing in India. Stay informed about Toyota Financial Services India's progress. And think about the broader implications of their approach, not just for other businesses, but for all of us.
This deep dive has shown that even in a complex and constantly changing world, businesses can thrive while making a positive impact. Thanks for joining us on this journey.